Hello, everyone. Thank you for joining us today for HCL Technologies Q4 FY’21 earnings press conference. We hope that you and your families are safe and in good health. I am Deva Priya and I'll be your host for the day. Before we begin the conference, I would like to share some key instructions with you all. During today's conference, all attendees will be in listen only mode. For the best experience, please select the stack and full screen view on top right of your screens. If you have joined from your phone, you can double tap on hashtag HCLQ4 window for better visual experience. There will be a Q&A session at the end of the conference. In case you drop out, please rejoin us using the same invite link. If you experience any technical difficulties, you can message us using the Q&A panel. Today, we have with us HCL Technologies President and Chief Executive Officer, Mr. C. Kumar, Chief Financial Officer, Mr. Prateek Agarwal, and Chief Human Resources Officer, Mr. Apparao VV. I would now like to hand over to Mr. C. Kumar. CVK, over to you.
Thank you, Devapriya, and good evening to all of you. I hope all of you and your loved ones are safe and you're in good health. With the current prevailing situation in India, it's very critical that you take all the precautions, be most vigilant at this time. At HCL, we kickstarted our business continuity protocols in very high gear within India, and we are extending every possible help towards our employees' health and well-being. And a little bit later in the Apparao, who's our CHRO, will talk a little more about that. I will now take you through the highlights of the Q4 and financial year 21 performance. We posted a robust Q4 and a full year FY21 performance, reflecting the strong relevance and resilience of our business model, the trust entrusted by our clients and ecosystem partners, and most importantly, the passion and commitment of our employees. We delivered 2.5% quarter-on-quarter sequential revenue growth. This is on back of a 3.5% QOQ revenue growth in Q3 in constant currency. For the full year, we posted revenue growth of 1.1% in constant currency, despite the headwinds caused by the pandemic-related spending cuts that we witnessed in the first quarter and to some extent in the second quarter as well. Our operating margin performance for this quarter was 20.4%, and the full year it is 21.4%. This is excluding the $10 billion milestone bonus that we paid to our employees. Post impact of the milestone bonus, the operating margin is 16.7% for the quarter and 20.4% for the full year. In Q4, we signed $3.1 billion of net new deals, which is a 49% increase year on year. And this makes it the highest ever quarterly booking that we've ever had of net new deals. In FY21, we signed $7.3 billion worth of net new deals, which is an 18% increase over the financial year 20. We won 19 large deals. Many of them are very transformational in nature for our clients. And our pipeline is also at an all-time high as we exit FY21. Both the booking and pipeline have been very broad-based. It cuts across verticals, geographies, service lines, across very marquee clients, Fortune 500 and Global 2000 marquee customers. Both the booking and pipeline have been underpinned by tremendous momentum in the digital propositions, whether it is application modernization, cloud migration, data analytics, cybersecurity, and digital workplace. These are the big themes which drove our growth, which drove our wins in the last quarter, as well as very, very reflected in the pipeline that we have at this point in time. I will spend a little more time talking about the performance by segments and verticals. Our ITBS segment grew both from a quarter-on-quarter perspective and a year-on-year perspective, primarily driven by very strong momentum in our digital business, which consists of consulting, application services, and data analytics. Cloud migration and cloud adoption was also an instrumental factor in driving our growth in the IT and business services segment. Uh, Products and platform, it's a seasonally a weak quarter, so it declined from a quarter-on-quarter perspective, but delivered a strong 20.5% year-on-year growth on a constant currency basis. Our engineering and R&D segment posted a modest 0.7% sequential growth and declined 5% year-on-year, largely due to our exposure to certain asset-heavy industries like aero, auto, and some industrial manufacturing clients. In terms of verticals, we saw very strong growth in life sciences and healthcare with 12.1% and technology services at 8.1%. Both are year on year in constant currency. Our financial services business also posted a mid single digit growth and continues to deliver for the digital transformation needs of our clients. And we continue to see great traction in our financial services segment. We saw a moderate kind of growth in telecom, entertainment, media, and entertainment segment, primarily because from a year-on-year perspective, some of the entertainment kind of industry clients had significant reduction in spend. That's what is reflected in our TME segment. As I mentioned earlier, the quarter saw 17 large deals. These 17 customers got added to our portfolio across geographies, verticals, and business segments with several Fortune 500 and Global 500 companies. I want to spend a little more time talking about some of these deals. First is one of our largest deals this quarter was from a Europe-based energy and utilities company. They selected HCL to set up a greenfield digital foundation environment and really modernize all their existing landscapes through our Cloud Smart offering. We were also selected by a global technology company as its strategic product engineering partner to drive product innovation and steer growth and customer advocacy for their end clients. A Europe-based, very leading global consumer goods company signed up with HCL for workplace as a service across all clients' support levels, geographies, environments, and providing consumer-like experience enabled through automation and AI. A US-based financial services firm signed a strategic engagement with HCL for application modernization, application support, and the digital foundation service, which is a very significant integrated engagement for us. They're also leveraging HCL to build on the wealth management capabilities and digital transformation of the wealth management applications that they have. A US-based telecom company expanded its deals with HCL for digital transformation to modernize its applications, migrate more services to cloud, improve user experience, and make applications more secure and robust. A Japanese automotive manufacturing company signed a digital transformation deal, which is a hybrid cloud contract, again building on our Cloud Smart offering, where HCL will deliver end-to-end IT transformation for spanning across digital platforms, agile application development, migration, support, and maintenance, and the digital workplace services. In this difficult year, our employees have played a stellar role. It has been an unusual and challenging year, and we rewarded them with a one-time bonus to commemorate our $10 billion revenue milestone. And our employees benefited from this, as well as from a comprehensive appraisal and a compensation review cycle. Our last 12 months attrition dropped from 10.2% in the previous quarter to 9.9% this quarter. This reflects the effort that we continue to make to support our family in these challenging times while continuing to invest in their career and evolving their skills to be relevant in the digital transformation space. Looking ahead, we continue to be confident of the market environment and the relevance of our solutions and services vis-a-vis the emerging needs of our clients. We continue to expand our offerings into new markets, especially large ones which are increasingly amenable to global delivery models such as Germany, France, Canada, Australia, and Japan, as well as growing our footprint in geographies like Mexico, Brazil, and Spain. We will enhance our investments in our Moto services, primarily to address the demand in our engineering and R&D services for digital engineering in areas of 5G, Industry 4.0, data engineering, and softwareization. We are also updating our cloud native offerings under a broad theme called Cloud Smart that addresses the emerging needs of our customers in the hybrid cloud world. As we expand our offerings and market reach, we would also invest in growing our delivery capabilities. In financial year 22, we will see continued focus in evolving our tech talent globally and further strengthening our offshore and nearshore delivery centers in Vietnam, Sri Lanka, Mexico, Canada, and Eastern Europe. This would be supported by additional delivery centers on site, primarily in our largest markets, which is US. We will hire and groom more than 15,000 entry-level hires, not only in India, but across our other geographies, including some of the locations like US and Canada. Our investment focus in all these areas will remain very relevant, will help us to remain very relevant and resilient as an organization in the coming years. Now, coming to the outlook for FY22, we are guiding for double-digit revenue growth in constant currency. In terms of operating margins, we will aim to remain with the 19 to 21% range. In closing, I'm very proud of how we have delivered to all our stakeholders in financial year 21, despite the unusual uncertainties posed by the pandemic. We are entering FY22 with great confidence on the foundation of this brilliant performance in FY21. Thank you and take care, everyone. I will now hand it over to Pratik to provide more details about the financial performance. Over to you, Pratik.
Thank you, CVK. I will go through some more details of the financials. FY21 was a curious year. All of us have gone through the last 12 months with a lot of challenges. So I hope you are continuing to stay safe and maintain the social distancing and all the hygiene. FY21 revenue for HCL closed at $10 billion, 10,175 to be precise. This was a growth of 2.4% year on year in US dollar terms. And in constant currency, it translated to 1.1%. In rupee terms, the growth was higher at 6.7% on year basis. In rupee terms, it worked out to 75,379 crores. The Ind AS EBITDA, which is the comparable across the industry because others are also publishing in Ind AS and IFRS, our EBITDA for the fiscal year 21, excluding the milestone bonus, for FY21 was 20,776 crores. That works out to 27.6% of the revenue. And after deducting the milestone bonus was 20,048 crores, which was at 26.6%. The reason we look at the numbers without excluding the milestone bonus is because that was a one-time bonus given out to the employees, basically to commemorate the company's crossing of the 10 billion mark. The profit after tax, again excluding the milestone bonus, came in at $1.76 billion, which was 17.3% of the revenue. And this reflects a growth of 13.2% on a year-on-year basis. FY21 PAT after the milestone bonus was at 1.68 billion, which was 16.5%. Moving to some more detail about the Q4 numbers. Q4 numbers, we closed at $2,696 uh, million, close to 2.7 billion, which is a growth of 3% on a sequential basis, quarter on quarter, and 6% year on year in US dollar terms. And in constant currency, it translates to 2.5% quarter on quarter and 2.6% year on year. Q4 EBITDA again on Ind AS basis and excluding milestone bonus was at 26.9%, and Q4 PAT was at $409.6 billion, which was 15.2%. After the milestone bonus, Q4 PAT works out to $330.8 billion, which is 12.3%. I think the best part about this quarter and the whole year actually was operating and free cash flows. So Q4 OCF was at $456 million, and the free cash flow for this quarter was at $385 billion. These are 138% and 116% respectively of the net income. And mind you, these are both after the payout of the milestone bonus, which was almost $100 million or 728 crores. For the full year, the OCF came in at $2.6 billion and free cash flow at $2.34 billion, which is 155% and 139% of net income, respectively. We end the year with a net cash position of $2.3 billion, rounded off, 2272 million to be precise. The earnings per share for this financial year, excluding milestone bonus, is at 47.9 rupees, close to 48 rupees per share, which is up by 17.6% year on year. The board has declared an interim dividend in two parts, rupees 10 per share, again to commemorate the 10 billion mark that the company crossed in this financial year. So just like we gave the employees milestone bonus, this is a milestone dividend for the shareholders, and we are upping the dividend per quarter from the 4 rupees that we were giving in the last 2 quarters, which itself was double of the 2 rupees that we were giving before that. And now from 4 rupees, we are moving to 6 rupees per share per quarter, not only for this quarter, but also going forward. So as far as this financial year is concerned, we had declared 10 rupees in the first 3 quarters. And along with the 16 rupees in this quarter, the total becomes 26 rupees per share for fiscal 21. The change in the tax law in India, as per the government budget announced and passed by the parliament, had some accounting implications for us during this year. And at the end of all those transactions and entries, the effective tax rate for the company stood at 21.9%. And that's all I had from the financial perspective. I would like to hand over to Aparna, our Chief Human Resources Officer, for giving some color on the employees. Aparna?
Thanks, Pratik. Good evening, everyone. These are very difficult times the world over, including for our employees. And I sincerely hope and pray that all of you and your families are staying safe. On that note, I just would like to start with the wellness and well-being initiatives in HCL. As part of our duty of care, we are helping our employees in all possible manner, and the first and foremost in that is, for the past 1 year we have been running a helpline. In wave one, we were running with almost 15 doctors and 20 nurses. Now we have increased it to 25 doctors and 20 nurses, and we are scaling it up to another 30 doctors. So in the next week to 10 days time, we will be running the helpline of almost 55 doctors, which is will provide a huge help to all our employees and their family members who have symptoms or who are worried. And this includes a lot of life coaches as well, the helpline. So we are trying to keep our employees safe. We don't want anyone to suffer for want of money. So anyone needing any extra help, till date we have not rejected anyone. So we are truly adhering to the duty of care and helping our employees. And there are many initiatives we have taken. We are touching base with all our employees at least once in 3 days to find out whether they are safe or not, whether their family members are safe or not, whether they need any help in terms of medication, hospital beds, testing. All we are providing free of cost testing to all employees who wants to get themselves tested, so that they know where they stand, or anyone who is showing symptoms. So that is another thing. We started our vaccination drive on March 24th. We got approvals from a couple of state governments. So the age group of 45 plus, we have already 1 month old in that. And within our campuses, we have our sister concern HCL Healthcare, which is running clinics for us. And we are very thankful to them for the support they have provided during the last 14 months. And all the vaccination, we are funding the vaccination for our employees and their families, and also our vendors who are helping us to keep our business running. So we are completely, this is funded by HCL as part of our COVID fight. And we are extending this vaccination drive to other locations as well. We are at different stages of approval process with state governments. So all our campuses will have the vaccination provision in another week's time. In addition to that, we are at an advanced stage of discussion with various hospital chains that can provide wherever our employees would like to go because of proximity. They would like to go to any of these chains. So we are working with them in terms of ensuring that they can get their vaccination done there as well. We are also creating beds, because we are finding, since in this wave there are the cases are a lot more compared to what it was in wave one. A lot of people are struggling in terms of getting oxygen support or beds facilities in different hospitals. And it is currently very serious in NCR region. But as a lot of specialists are predicting that it's a question of time before it will be of similar severity in other geographies. So we are setting up 30-bedded quarantine centers or isolation centers with oxygen support and ambulances with ventilator support. And we also have, as part of our CSR activity, earlier we have donated a lot of ventilators to a few governments. And in turn, we have certain agreements with them to provide ventilators to our people. So we are also scaling up in terms of creating these beds for our employees and their families, and ensuring that they get the right medication, oxygen supply, and ventilator support wherever required. So and we also helped a large hospital in Chennai, in Delhi, in creating a 100-bedded hospital where we funded it very actively. and as part of our responsibility towards society also, we are trying to help the government in whatever way we can in creating additional facilities for our people. We have the partner network hospitals. With each of them, we are in touch to provide any help that is required for our employees. So these are some of the initiatives what we are taking. We have taken in the past few months, and we continue to strive in keeping our employees and their families safe, and do whatever we can for the society. That's part of the wellness and well-being initiatives we have in HCL. Just a little bit color on the usual HR update. We are probably the only organization which has given increments with a lag of only 1 quarter, and that too full increments we have given. Just with 1 quarter lag, our cycle is 1st July, and we have given it from 1st October. And also we have given a one-time bonus of almost $100 million, as you heard in the commentary from CVK and Prateek. So we are also ensuring that whatever we can help our employees in terms of giving them additional resources in these troubled times. So we have taken care of that. And as CVK mentioned, we have our business. There is a lot of demand in terms of hiring. And this quarter alone, we have hired 16,878 people with a net hiring of 9,295. And we have seen our attrition also has gone down considerably. Compared to last quarter, the LTM attrition is at 9.9%, which we do expect might slightly increase, but not dramatically. That's on the attrition front. And we also have ramped up our intake of freshers, because we have lost Q1 and Q2, almost all of Q2, because of closure of educational institutions. So in this quarter alone, in JFM quarter, we have onboarded 6,034 freshers at offshore and 620 freshers at on-site. Overall, for the whole year, we have onboarded 14,500 freshers, much more than what we did in any previous 4-5 financial years. And we are targeting in FY'22 that we would be hoping to touch closer to 20,000 freshers onboarding. Our recruitment as well as freshers onboarding is at its aggressive best, given the growth what we are envisaging. And our US localization also has increased from 69.8% last quarter in OND quarter to 70.4%. So our local hiring in different geographies also has gone up quite well. And our investments in training and upskilling, I'm very proud to say that we have crossed 2.3 million hours per quarter. This used to be approximately 1 million per quarter in FY'20. FY'21, especially in the last 2 quarters, we crossed 2 million mark. And if you look at the digital skills alone, close to 48,000 people have been trained with almost 850,000 trainings that we provided in all the Mode 2 skills. So that augurs very well, and this has helped us in a great amount of internal fulfillment, which has crossed 50% in FY'21. And we continue to push the envelope in terms of increasing those numbers. So our gender diversity also has gone up. We suffered a little in terms of not being able to hire during this year, but overall we increased 40 basis points in our gender diversity. And I'm glad to say that Forbes has recognized in North America as one of the best diversity practices organization, which is a proud moment for all of us. With this commentary, and once again wishing you all to stay safe, and I hand it over to Devpriya. Over to you, Devpriya.
Thank you, Appa. We will now be opening the floor for questions and answers. I would like to request Suraj from HCL Technologies to start the Q&A. Suraj, over to you.
Thank you, Devapriya. Good evening, ladies and gentlemen. If you have joined us from the WebEx mobile app, please tap on the three dots on the floating panel on the bottom of your screen and then tap on the raise hand option. In case you're in your computer system and want to ask a question, please click on the raise hand icon on the bottom right of the participant panel and we will unmute your line. And in case you have joined on audio only, please press *3 to raise your hand. Our first question is from the line of Ms. Rima from CNBC. Rima, please go ahead.
Apologies, I'm not on the video.
You're not audible, Rima.
Rima, you're not audible.
Is this better?
Could you be a little more louder? We can faintly hear you.
Okay. Is just me now? Hello?
Yes.
Yes, please go ahead.
We can hear you. Go ahead.
Okay. Yes. No, congratulations on a good quarter. I wanted to understand what the outlook is for the next year, because you refrained from giving a quantitative guidance on the top line, which is something that you do give. So I wanted to understand the reason for that. Is it some sort of an uncertainty? Are you still not very confident about how it's going to play out? So if you could just throw some more color on the revenues, as well as even on the margin front. The margin guidance at 19 to 21% is lower than the margins that you have clocked in this year. So what is the reason for the pressure? Thank you.
Yeah, Rima, from a top line perspective, I think as you heard, we've had one of the highest bookings in the past quarter. Our year-on-year booking went up almost 18%, and the Q4 was almost 50% higher than the Q4 of the same year. So we are getting into this year with a lot of confidence, and we provided a double-digit revenue growth. So we feel quite confident of good outlook as we move forward. And in terms of margins, of course, we've given a guidance of 19 to 21%. When we did the planning, we did expect a little bit of travel and transportation costs to come back. And the second aspect, as I highlighted in my commentary, there are several areas where we have identified to invest in some new geographies in terms of ramping up of our presence in new geographies, some more two propositions around digital engineering solutions like 5G, Industry 4.0, softwareization. So some of this, we think it's the right time. Already invested. We wanted to make sure that we had enough headroom to invest and really create a good outcome in the longer term. We thought this was the right time to take those steps.
Thank you. All the best.
Thank you, CVK. Thank you, Rima. Our next question is from the line of Ms. Swati Murthy. Swati, please go ahead.
Good evening. I just have more like follow-up. I hope I'm audible.
Yeah, Swati, please go ahead.
Yeah, thanks. So it's about the fresher hiring, right? I mean, you're planning to hire 20,000 freshers in FY'22.
See, we have done 14,500 Swati this year. I mean, if had you asked me 6 months back, I would have probably refrained and said 10,000. But we were able to do that. Because of this wave 2, we are not able to really predict how many campuses will be available, how many graduates will be available. So we definitely, as on today, the offers we rolled out, the visibility what we have is close to 17,000 already. So we are expecting that we will push ourselves in terms of getting to 20,000.
Okay. And you did mention about the demand for talents, right? I mean, it's at an all-time high. So your attrition is 9.9%. I mean, one of the lowest I have at least seen. But this is not going to stay the same. You did mention it's going to increase. What are the other? Are you looking at another round of compensation review? I know one of them is in July. So would you look at what additional measures to retain these talents when the demand is so high?
Yeah, definitely there are various measures what we have taken. I mean, people who are skilled, who are deployed in critical areas, we already have skill allowances for those people. And this has been continuing for almost 2 years. This is not something new. And our compensation cycle, we just started. I mean, for all, as I mentioned, 1st October is where we have given up to our E3 levels, and 1st January is when we have given to mid and senior level leaders. So we will discuss this in the next quarter when we come before you, because we have not gone to the board for any request as on today, because it's just 3 months old. The whole increase is 3 to 6 months. Yeah, and it was a full increase what we have given. We have not reduced any increases.
Just a little more clarification on the vaccination. You said you will be expanding it to other locations. You mean beyond India you're talking about, right? When you talk
No,
about
beyond India.
extending.
Yeah, beyond India, in any case, wherever it is required, we are supporting. But most of the governments are funding the vaccination and controlling the vaccination, even in places like US. Some places like Philippines and Bulgaria. So these are places where governments are encouraging organizations to fund it, and which we are doing. In India, all our campuses, we are setting up. We have our healthcare facilities. We are expanding our vaccination drive to all the campuses through our HCL healthcare organization.
Thank you.
Thank you. Our next question is from the line of Ms. Surabhi Agarwal.
So I got the HCL copy and then.
Surabhi, please go ahead.
Hi everyone. Thanks for taking my question. I have a couple of questions. One is that I want to understand from CVK that why change the practice of giving a guidance in terms of numbers this time, where you're just saying that HCL is expecting a double-digit growth next year, and why not give a range like you always do? Is it because you are expecting another wave in your key markets, or what is the reason why you're not spelling it out? That's my first question. And secondly, I also wanted some clarity on the bonuses for employees, as well as the bonus for the shareholders. I missed that one. But I just want to first ask about why not give the guidance.
Yeah, Surabhi, it's not about any uncertainty. We've had some very strong bookings through the year, and it culminated in one of the biggest, highest booking quarters, $3.1 billion deal. Net new deals. This does not include renewals or rate cuts. So this is now getting into execution planning, as well as if you look at the overall outlook, our pipeline is very strong. Given all those conditions, we are very confident of a double-digit growth. Now, depending on execution, it could be higher. So we just wanted to give a floor, which is really the lowest end of our expected performance. And your second question was on the bonus to employees, and our variable component we expect to pay very similar to what we had paid in the last year. And in terms of bonus to shareholders, of course, as Pratik said, we have announced a special interim dividend of 10 rupees, and we've also increased our dividend from usual 4 rupees per quarter to 6 rupees per quarter. That's what we are doing.
Right. And what is the reason for the drop in net profit last year, sir? If you could just clarify.
Last year, I think our net went up, but Pratik, you want to comment anything specific?
I'm
Is it
asking
a
about the net
quarterly
income.
question?
In the quarterly income, not year on year.
Quarterly.
The quarterly numbers.
Yeah. So, Surabhi, there was this finance bill which got passed by the Parliament and became the Finance Act. There is a goodwill that is there in our books, which was earlier depreciable as per the tax law, and the government did away with that. So that is the main reason why there is a hit on the tax expense. Uh, and mind you, it is different in Ind AS and different in US GAAP. We have always communicated all the financial in US GAAP, and that's what we.
Okay, your voice is not very clear. If I've understood it correctly, it's because of a one-time hit on tax outgo because of some change in the finance bill. Is that what? CV, can you
Yes.
please clarify?
Yes, that is right, Surabhi.
Okay, okay. Thank you very much, Pratik. Thank you, CVK.
Thank you. Our next question is from the line of Mr. Ayushman Barua. Mr. Ayushman, please go ahead.
Yeah, hi. Just a quick follow-up itself. So is the profit also down because of the hike that you have doled out in the month of February? Is that so? And the other question is, can you give some color on the overall growth in the US and your Europe markets? First on the profit and then on the growth, please. Yeah, thank you.
Yeah, Pratik, would you want to address the profitability
Yeah,
question?
so as far as I think this milestone bonus is sort of coming up in multiple questions. So let me kind of spend a minute on that. See, this is the February announcement which we did, uh, talking about the 10 billion milestone that the company hit on the revenue, and we equated it to 10 days of pay for each and every employee who had completed at least a year in service or more. So that number finally translated to, including the payroll tax that we have to pay in US and some other geographies, it worked out to finally an amount of $99.8 million, say $100 million to just round it off. And in rupee terms, that was 728 crores. We had earlier published, I think it was something like 700 crores, but in the final analysis, after we sort of worked it out at an employee level, it worked out to finally 728, including the payroll taxes. So that is the one-time measure that we have sort of excluded while reporting our numbers. While obviously the financials do carry that number as well, and so does the cash flow and all of that. I hope that clarifies.
Yeah, okay.
Yeah. And then responding to your question
Next
on
question
the
is
growth.
from the line of Ms.
Sorry, let me just complete that question. You asked me about the growth prospects in US and Europe geographies. As you can see, we had a 2% sequential growth in the US and 0.7% sequential growth in Europe in the last quarter. Our 19 large deals and the $3.1 billion booking and $7.4 billion booking through the last fiscal is quite well spread out between the Europe and US geography, and to some extent from the APAC as well. So, given that background, and there is a lot more propensity to adopt global delivery models in countries like Germany and France. So, given all that context, I see a strong growth in Europe as well as in the US. US, if you see, life sciences and healthcare vertical we are present in almost every large pharmaceutical company, and in financial services as well. We see a good spend, both discretionary and cost transformation kind of spends. So all of this gives us a lot of buoyancy towards what we can expect from US and Europe markets.
Thank you.
Question has come in on the line, and it's from Ms. Stuti from PTI. And her question, I think, is towards Prateek, is why the net income is down in the March quarter year on year.
Yeah, so like we explained, net income is a function of the EBITDA and EBIT, and that number is a little lower on a year-on-year basis, like you're asking, because of the investments that we've done, the huge number of freshers that Apar talked about, and there is impairment charge that we had to take on one of our IPs that we had bought. So all of these combined and some forex changes have led to a small drop there.
All right. Thank you, Prateek. May I now request, please limit your questions to one, as there is a limitation on time. Our next question is from the line of Mr. Poonam Sane. Ms. Poonam, please go ahead.
Thank you so much for taking my question. I just wanted to understand more, give you some more color in terms of how are you exactly seeing the demand environment now in the second wave of COVID versus the first wave, and also if we are looking at the overall deal pipeline, while you are fairly confident of the broad-based revenue growth across the board, how do you see the products and platforms vertical shape up? Because that has, of course, declined QOQ, but it has performed on a YOY basis. So where do we see that performing?
Yeah, Poonam, if you want to look at the products and platform business, you should appreciate that it is going to have some seasonality in different quarters. So the right way to look at a product business or any software business is year-on-year growth, and you will see a strong growth, 20.5% year-on-year in the products and platform business. And we don't necessarily pay a lot of importance to a quarter-on-quarter perspective. But just to give a context, O&D, which is the December quarter, was a peak quarter where we had a very strong performance. And JFM is seasonally a weak quarter, and that's why you will see a decline in the JFM quarter.
If I may be allowed just one more question, how do you see the overall performance coming in terms of the verticals, especially the manufacturing vertical and the retail CPG, because that is also slightly subdued?
Yeah, that is true. From a manufacturing perspective, I think we discussed this in one of the calls earlier as well. We had signed a mega deal in the previous year, which is FY19, which executed in FY20, and then there is some amount of offshoring that happened in FY21. So that was a very large deal. So that had a certain declining characteristics as a part of the deal itself. And of course, in manufacturing, some of the customers have gone through a lot of difficulties, office automation and in auto, aero, which also gets classified under manufacturing. And that's really the reason for the performance, as you can see in the manufacturing segment.
Thank you.
Thank you. And today's last question is from the line of Ms. Supriya Roy from TechCycle. Ms. Supriya, please go ahead.
Hello. Hi, I hope everyone's trying their best at least to try and take care in these rough times. I have a quick few questions for Apar Rao here to do with the
Can't hear you.
Hello, Supriya, you are
Supriya, we
not
can't
audible.
hear you. Please go ahead. Ms. Supriya?
Hi, can you hear me now?
Yes, we can hear you now. Please go ahead.
So I want to know what is the percentage of salary hikes that were offered across each of the bands or levels of employees this particular year, and if there was a concentration in any particular geography or any particular delivery units, and also how many employees were hired so far in 2021, and how much of these or a percentage were freshers. Also, if you could just elaborate a bit on the challenges as Aparao hinted towards a couple of minutes ago in terms of hiring from campuses, would be great. That'll be all.
Okay. So the hike what we have given is 7 to 8% at offshore and 2.5 to 3% at onsite, and around 4% nearshore. Nearshore geographies are geographies like Mexico, Poland, Bulgaria. Those are the nearshore geographies. Right. So and that is definitely a notch above generally what we give, which is 6 to 7%. So that's one, and definitely it is higher at the lower band, lower levels of the bands. The high, any good performer can see an increase of 10 to 15%. Right, the top two raters. That usually is the kind of hike what we has provided. So in terms of hiring, if you look at what the freshers percentage is, roughly around 40% what we have done in FY20. Our intent is to take it a couple of notches higher over the next 2 to 3 years. We would like to take it to 70% because lot of digital skills, the millennials and Gen Z, they come with those skills and they don't need to do any unlearning. While we have a responsibility and we are committed to upskilling and cross-skilling our people, but the skills that are required mostly can easily come from this cohort. So that's one of the reasons why we would like to increase our fresher hiring over the next 2 to 3 years.
Thank you, Appa. There are no more questions. Back to you, Devapriya.
Thank you, Suraj, and thank you everyone for your valuable time and presence. Please note the recording of this webcast will be available on HCL Technologies website. With that, we conclude this press conference. Thank you once again for joining us. Stay safe and take care. Goodbye.